Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Tesla's TSLA shares and why it has lost around $700 billion worth of market value. We're also going to be going over some other stories regarding Tesla and their TSLA shares, such as why Bill Gates got a special invite from Elon Musk to drive one of the Tesla semi-trucks. We're also going to go and talk about why Tesla is revamping and remodeling their Model 3, hopefully which will lead to better numbers in their overall sales, while also making their production even more efficient. After we talk about Tesla, we're going to dive in and talk about MULN Automotive, ticker symbol MULN, to determine if I have changed my mind on it, what's the latest developments for this company, and if it's a good buying opportunity considering it's trading at only 19 cents per share. After that, we're also going to go over another very well-known electric vehicle company named Lucid. So if you want more electric news videos, remember to go and smash that like button right now, comment your thoughts down below on which of these companies you like the best, subscribe if you are new, and without further ado, let's jump right into today's stories. By now you know that Tesla is an electric vehicle manufacturer, but they also dabble in energy storage and energy generation. However, we're going to focus more on their automotive segment, particularly their electric vehicles. Right now, the TSLA share price is trading at around $187 per share, while experts in this field believe the company should be trading at anywhere between $264 on the low end to $436 on the high end over the next 12 months. But if you've looked at the TSLA shares recently, you've noticed that the share price has dropped pretty substantially. All in all, Tesla's market capitalization has plunged from over $1.2 trillion down to around $530 billion over the last year. This means that Elon Musk's company, Tesla, has nearly lost the entire market value of Berkshire Hathaway, which in my opinion is one of the best investments that you could possibly have in your portfolio. Tesla's market value has dropped around $670 billion, which would equate to the value of 3 Disneys put together, or 4 Nikes put together, or 6 Starbuckses put together on a valuation basis. This would also mean that this drop in price comfortably exceeds market caps of Johnson & Johnson, which is $460 billion, ExxonMobil, which is $457 billion, and JP Morgan, which is $390 billion. If you're not familiar with what a market cap is or a market valuation, essentially it multiplies the current share price by the number of outstanding shares, which gives you the market capitalization of the company. This would also mean that Elon Musk's company has lost more value than what Home Depot is worth, combined with Coca-Cola and Pepsi. Tesla is known for their very large market cap and their overall valuation because investors keep purchasing their shares, and that increases their overall market value. And it's also one of the largest companies on the S&P 500, apart from Apple, Alphabet, Amazon, Microsoft, and Berkshire Hathaway. But what does this mean for investors? Well, this signals to investors that people are selling off their shares. They're liquidating very high-flying growth stocks like Tesla as we face very intense inflation, rising interest rates to get inflation under control, as well as an overall very negative looming recession right now. It's arguable that we're technically already in a recession, but it really just depends on what metrics you are using to determine if we are in a recession or not. On top of that, investors have liquidated their Tesla shares because Elon Musk has recently purchased Twitter for around $44 billion. This means that Elon Musk as a person is going to be more busy running another company, and on top of that, it means that Elon Musk actually sold off some Tesla shares to buy Twitter. So this does not look very good. And lastly, which is very negative for the company, Michael Burry, who is a huge short investor, actually said that the TSLA share price could tumble further, and I agree with him in the short term. We are going to see a plethora of various larger companies and more speculative growth companies pull back in their stock price because the overall economic environment is very ambiguous right now, and investors don't like it when they don't know the future or when they are underprepared. This is going to cause multiple types of stocks to fall, not just Tesla, so investors really need to prepare and fortify their portfolios so they can prevent themselves from losing money unnecessarily. unnecessarily. Now, in the next story about Tesla, Elon Musk literally invited Bill Gates with a special invite to drive one of the Tesla semi-trucks. And why did he do this? Well, the reason why Elon Musk actually invited fellow billionaire Bill Gates to drive the Tesla semi-truck was because in the past, Bill Gates was very critical and said that the semi-truck would never happen. And clearly Elon Musk is proving him wrong, so he wants to give him the opportunity to drive a semi-truck, which he said would literally never happen. So Elon is being a little cheeky here against fellow billionaire Bill Gates, which I think is pretty funny. And if Bill Gates actually decides to do this, I think that would be hilarious, but I highly doubt he's going to go through with that. But I like how Elon extended the invitation just in case. Now, what is the deal with their revamping of the Model 3? The Model 3 is one of Tesla's most popular electric vehicles that they sell, but Tesla wants to revamp it and make it better and cheaper to produce and potentially cheaper for consumers to buy through making a few various changes. So according to Reuters, Tesla is developing a revamped version of the Model 3, which I think is a fantastic move. The electric vehicle maker aims to cut production costs and also boost the appeal of now its 5-year-old electric sedan known as the Model 3. This redesign is codenamed Highland, and they are not going to only change the internals of the Model 3, but also what it looks like externally. This new revamped version of the Model 3 will go into production in 2 of their main gigafactories. One is going to be their Shanghai factory, and the other one is going to be their gigafactory over in California. In terms of the Shanghai Gigafactory, Tesla will be redesigning their Model 3, and that will go into production in the 3rd quarter of 2023, according to inside sources. Now, when Reuters directly tried to get a comment from Tesla, they did not respond to Reuters. So as of right now, this is just leaked internal information. But I do think the change of the Model 3 and the revamp is going to do the company good. For instance, the Model 3 is one of Tesla's cheapest electric vehicles, currently retailing for around $47,000 in the United States, and of course it's a bestseller, which is slowly being overtaken by the production and selling and delivery numbers of the Model Y crossover. But despite this, I think the revamp of the Model 3, both internally and externally, will lower the cost of this EV, making it easier for consumers to buy because it's going to be selling at a cheaper price point, even if you don't get all of the performance that you would want from an electric vehicle. But affordability is something that Tesla is going to start pushing, and we're still waiting for that $25,000 electric vehicle that Tesla promised us, and I think that's going to be on the way, but I don't think it's going to be anytime soon. So with that being said, I think the revamp of the Model 3 is a great idea. I want to see what new body style they put on this machine and how low the price point is going to go, but for that we're going to have more leaks from the internal sources. Going over to our next story, we're going to talk about MULN Automotive, ticker symbol MULN, which currently trades for a very cheap share price of just 19 cents. A lot of penny stock investors and newer investors in the stock market don't understand just how risky this company actually is. The only thing they are paying attention to is a cheap share price, so why not put in $10 with the chance of it going to $100? But again, in my opinion, it's pretty bad risk management. But first, let me tell you the appeal of MULN Automotive to some investors. I myself, full disclaimer, do not own MULN stock. I reported on it sometimes because you all want me to, but I have been extremely critical of this company, and I personally don't own any of the shares. The reason why some investors are drawn to this company is that the world is moving towards cleaner and greener energy, and electric cars are going to do that, at least in the minds of the majority of consumers, because it's going to reduce CO2 emissions and greenhouse gas emissions. Also, if you are an electric vehicle investor, feel free to also invest into lithium, cobalt, or nickel producers and or mines, because we could experience a large shortage of these finite metals, which are used in the creation of electric vehicle batteries. But how does this link to MULN? Well, analysts at BCG estimate that the world will adopt EVs and that various electric vehicle manufacturers will see an increase of 20% in global sales, and then by 2035 that could increase to 59%, which is absolutely insane. This is why investors are buying up electric vehicle manufacturing companies like MULN Automotive, Tesla, Lucid, NIO, XPeng, BYD, and a plethora of others, because electric vehicle manufacturers are expected to benefit from this demand increase. However, with that being said, MULN in particular has had an extremely difficult 2022, where the stock price has dropped by around 96.1%, and that's why it's trading at 19 cents per share. Now, in a previous video, I said that they are going to go through a reverse stock split so they can get their share price over $1, which prevents them from being delisted so the company can still be publicly traded. Many investors are drawn to MULN for what they're developing, particularly their MULN 5 electric vehicle, which is a fully electric SUV, and the MULN Dragonfly, which is an electric sports car. MULN also received higher than anticipated pre-bookings and pre-orders for their MULN 5 electric SUV. On top of that, MULN has made multiple acquisitions of other companies which are being very synergistic and working together. For instance, they acquired and control 60% of an electric vehicle truck innovator called Bollinger Motors, which creates the B1 and B2 sport utility trucks. So MULN also wants to come out with EV trucks as well. But despite this, the MULN CEO has sold shares various times on multiple occasions. Literally, he has sold his shares 7 different times this year alone, bringing his total shares sold to 2.53 million. And it's not good to see insiders selling their stock, because that could mean that insiders are thinking that right now is a good time to sell the company because the stock price is so high. On top of this, why do I personally not like this company? I think MULN has weak fundamentals and therefore financials, and very weak profitability. MULN's operating loss widened and not shrunk by 184.5% year over year to 18.22 million, and the company's net loss widened by 289.9% to $59.47 million. They also do not have a clear trajectory toward profitability, and I would much rather wait to invest into this company and wait for them to prove themselves before they get my hard-earned money. There is no reason why I would want to invest now and take on unnecessary risk of losses while the overall macroeconomic environment is not friendly right now, particularly to smaller, newer EV growth companies like we talked about in the beginning of the video. So right now, MULN is not a priority. However, it could change my mind if they end up showing that their business model works, showing us a very good trajectory toward profitability, and changing some of its overall fundamentals. On top of that, from a technical analysis standpoint, the MULN share price is trading below its 50-day and 200-day moving averages, which indicates a clear downtrend, which is not supposed to top anytime soon, which is why this article and many other professionals have an F rating on MULN stock, signaling a strong sell rating. But this is just my opinion. Always make sure to do your own research. Next, we have Lucid, the next electric vehicle company we're going to talk about, and for me, it's more of a neutral company. Now, the author of this article believes this company will absolutely skyrocket, but before I analyze his article, I want to give you my opinion. I think we should wait for the LCID share price to drop further before investing. Some people think it's undervalued right now. I don't think so. I know it's currently trading at $10, which is the same price of their original SPAC, and professionals believe the company should be trading anywhere between $10 and $26 over the next 12 months, but I think we should wait to buy this company as of right now. I would much rather get this company for cheaper. I don't feel comfortable buying it at $10. Now, with my opinion aside, let's analyze this article from a Lucid bull. The main points he goes over is he says that Lucid is an undervalued hyper-growth company and that people should invest into it. They have enormous revenue growth potential, and the company could become highly profitable due to their ability to mass-produce vehicles. On top of that, they also have some good catalysts coming up, such as their new SUV, which is scheduled to go into production next year. So let's dive into this article to see his evidence on why this is a good or bad company. Right now, he highlights a few different trims and vehicles that the company currently sells, such as Air Pure, the Air Touring, the Air Grand Touring, the Air Dream Edition, and the Air Sapphire. If you can see on screen, the prices range anywhere from $87,400 to $249,000. For this electric vehicle, the horsepower ranges anywhere from 480 horsepower to 1,200 horsepower, with battery life ranging anywhere from 410 miles to over 471 miles. miles, which is pretty good. Their Air Sapphire, which is the highest trim that you can get as of right now, can hit a 0 to 60 time of just 1.89 seconds, which is absolutely insane, and that's intended to compete with the Tesla Model S Plaid. However, a good catalyst is coming up for this company in 2025, where they are planning to launch their luxury sedan. It's going to be a mid-size sedan, and they will be launching that in 2025. Lucid has also been on a wild ride over the past few years, with the company's share price surging from $10 all the way up to around $65, where greedy investors started to invest into this company in the $50 to $60 range. Clearly, these investors are deeply in the red because the stock price has fallen all the way back down to $10. And again, my opinion here, I think it's going to go lower, and I would advocate to get this company at a cheaper price point than $10, depending on your risk tolerance, how long you plan to hold this company, and how much exposure you already have to the electric vehicle space. The good news about this company is that they are already producing thousands of vehicles, and they are anticipated to grow their production operations as time goes on. And that's why this author thinks that the Lucid stock price is too low and that the company is oversold and therefore undervalued. Now, I tend to disagree with him, but let's see his overall analysis of the financials. He said in 2021, Lucid brought in around $27 million worth of revenue. Then this year in 2022, the company could surge in the revenues and bring in $750 million. Again, insane growth, absolutely insane. And then next year in 2023, they could bring in $2.6 billion. This would also mean at their current CAGR by 2026, there is potential for the company to bring in $12 to $15 billion worth of revenue in 2026. But again, and I like how the author is honest here, he says these are higher end estimates, and heck yeah, these are way high end estimates. So we should not anticipate that this company will meet the high end estimates. I actually like to proportion my investments based off of the lowest estimates to determine whether or not this company is a good buying opportunity. We also have a good share price chart, which compares their revenues in billions of dollars, their revenue growth percentage, their forward price to sales ratio, as well as their overall market cap in billions, and how it's going to reflect in their share price. Currently in 2022, the share price is $10 per share, and the next year it could double to $21 and then $47 in 2024, all the way to $236 by 2029. This growth rate is insane and almost unparalleled from any other company that I can think of. He also believes their revenues will grow by 2,700% this year, and the next year 250%, then in 2024 by 100%, and then according to the law of large numbers, their revenue will slowly tick downwards and tick off. However, a market cap of $400 billion, that is pretty hefty. I don't think Lucid is going to achieve that market cap by 2029. If anything, I would rather cut all of these price targets in half, and that's what I think the stock price should be worth in those years. So you can compare my price targets, which are relatively neutral, to a more bullish price target prediction from this Seeking Alpha author. And I do like how he adds the risks to Lucid. Yes, there are risks here. He says while he is bullish on Lucid, risk still exists, and that's the same for every single company. Every company has risk associated with it. So what are the risks? Well, the first risk is that this company may not become as profitable as soon as anticipated. So they could be profitless for longer than expected, which is going to weigh down and lower their overall multiples. The next portion is competition from Tesla and other EV manufacturers. Lucid has a pretty good management team and pretty good engineers over there, but I don't think that their technology is going to be on par over the long run. I hope I'm wrong. I really hope they do well. But if you look at the technology of Tesla and these other companies that are making batteries that can go over 600 miles per charge, that's insane, and Lucid really needs to get on this. Another reason, besides competition and the technological advantage and production advantage that Tesla has, Lucid may also run into demand issues. Why? The reason why is that Lucid prices their vehicles at premium prices, and a higher cost does and can guarantee higher margins, but with the higher cost, they are going to be less attractive to the majority of consumers, and therefore the demand won't be as high for Lucid as it will for other companies like Tesla, who have a range of models and prices that they offer their consumers. But who knows, maybe maybe this could work in Lucid's advantage if their technology can keep up overall. So with that being said, that would be my thoughts on Tesla, MULN, and Lucid. I hope you enjoyed this news update and price target and price prediction video. I would love to hear your comments down below on any of these companies. Remember to smash that like button for more electric vehicle news videos just like this one. Subscribe if you are new, and I will see you in the next YT video.